Okay, good morning, guys. Can everyone hear me clearly? And is the screen coming across clearly for everyone? Okay, great, great. So, good morning. It's going to be a very interesting day. So, let's kind of get started off with a modification we're going to have to make to the chart, which I was hoping we would get before we got here today, but wasn't to be. So, the 28 and 3 quarters that was sitting here, right? Obviously, what I would have preferred to have was this 24 and 3 quarters to 26 and 3 quarters. We just came down to 26.50 pre-market. I imagine we'll be below there. This area is a critical area right here. So what I'm going to do is we're going to modify this, and we're going to um, change this, move this up to 33, right, and change the color to purple. So you have one zone there, and get rid of the 28.75 altogether. I was wondering why we stopped there last night. It didn't make a lot of structural sense. There you have it. So I've actually stretched it a little bit past where I normally would expect it to go. Normally I would have had that 26 being the very bottom. However, um, given the volatility out of the gate, we're very likely to push a little bit past, then snap back up. You'll also see that there's two white zones. And the reason for that is initially up in this area, we've not been able to get above this area. It's not really a white zone. As a matter of fact, if we get into it, it's likely that it breaks. However, I want to see it trade above since we've been unable to do so. And then I would look for a backside test back down to catch the long side trade if we get above there. You know, right now we're trading a pretty damn good 15 points away from getting to this point. And if we had enough of a extension up, hold on one second here. Let's see. Give me one second, guys. Some people are having trouble getting in. Let's see if I can fix that. Okay, hold on a second here. So, excuse me, I apologize. So if we got above, right, on a good enough extension into this area, I would expect responsive sellers the first time, but I'm not going to be very interested in testing the second or third time. It would be a real sign of strength if we reversed and got all the way back up here today. The main area that's going to determine whether we have buyers in control or sellers in control truly is the white this area right here, which I also labeled as the true white zone, right? The first time up into this area, if we get responsive buyers, I will take a short. I'm willing to take a loss in this area if we get up here. I would rather take divergence, and obviously I'll be measuring the size of the rotation just to go over the basics, right? My objective is not to capture every trade that's out there. The primary focus is on the first trade into the zone with a very nice sized rotation into that zone. For me, meaning at least 6 points. Now, we're clearly going to have increased volatility today, right? So you may, if you're a more conservative trader or you're trying to, you know, optimize your entries, right? You may want to push that to an 8 to 10 point stretch to make sure we're truly stretched. It doesn't bother me either way because I know over time, right, that these zones provide a tremendous odds for me. What I do if I were concerned about the speed or the volatility is simply try to locate near the back of the zones so I could use smaller stops. But I will trade my normal trade plan even on a higher volatility day. However, the focus will be even more strongly on the first touch in, and I'm looking for tick divergence to find major points, major inflection points where we might get a reversal up. Remember, bull markets have two characteristics. First of all, the corrections tend to be very swift to the downside, and they tend to last for a very short period of time. The typical downside move looks like this if you look at most days. We start up, we try to get a little push up, we have a quick rip down, right? Then we get to a major area. We kind of do one of these little dances in here as everyone tries to figure it out. And then we get a bounce up towards that 1 o'clock time frame. And then we either go this way this way, or we flatline at that point. The afternoon's obviously harder to call. That's why I don't focus very much of my energy in the afternoon. I try to focus most of my energy in the morning. The gap down is significant. Getting below this 26 is going to be very important, and we've tested it multiple times. And I want to show, I know I'm spending a little bit of time on this, but I want to make sure everyone's clear here as to what the structure looks like in this area. So I'm going to pull this chart in just a bit. Here we go. If you'll look, this 26 area was key. We broke it really decisively in this area, right? We overstretched it. We trapped sellers. This was a bizarre two days in here where we had pretty much, it looked like almost a lack of liquidity in either direction, right? However, if you look, this has been well tested on the downside. Okay, and I even gave it a little bit of breathing room past what I would normally say. I'd normally say this 26 is the area. But if we get below, if we get into this area again, after the, I would expect a quick rotation out of it first time in, but I would not be surprised at this point to see this break considering where we're opening, and it will not be an automatic long for me this morning, right? I'll need a good rotation in to consider it, and it'll have to be the first time in regardless of the size of the rotation in order for me to take it. If this breaks, this zone is support. However, it's tenuous. I'd rather get a nice big fat stretch down to this 1815 level, okay, followed by the 1810, and then the level below this is 1804 to 1806. I will look to take long trades in each of these areas for rotation out. It'll be critical today because we are most likely setting up for a trend day down scenario. So there's two key elements there. First of all, first time into the zone offers you the highest odds, right? Second and third touches, while they may work, the risk increases significantly of a zone break, okay? And then obviously the rotation size will be critical. The other element to consider is that if we are having a trend day down, trades prior, let me stretch this back out now that I've shown you all this. Let me just get to the end without doing all that. There we go. Okay. These were the zones I'll be looking first time in. Also, 1799 to 1801 is also a zone. I don't have it labeled here, but you might want to throw it onto your charts. Okay. What was I going to say? If we get a trend day down scenario, a couple of things are important. The two most critical things. First of all, good size rotations from your swing high to your point of entry. The number two issue is going to be the amount of time it spends in the zone. I can tell you today, if we get to 25 minutes and I haven't been able to pull a scale off of any sort, I will be out of this trade. Risking, I'm happy to give up the upside potential in a trade to avoid having to take a loss after having given it plenty of time to have the trade worked out. So you won't even have to ask me today. I can tell you I have already have my alarm set. At 25 minutes, I will exit the trade, and or if I'm profitable on it, bring the trade to break even. If I exceed 25 minutes today and I've already taken a scale, my choices are two choices. If I'm at a good location, either particularly at this 1805 level, if we get down here, I will bring my stop to net break even, meaning I have one scale out and I'll use the profits from that scale to give me a net break even point, and that's where I'll move my stop to. If I do not have a scale, I will bring my stop to break even period or a quick stop loss out. I can't emphasize how important it is when you're trading leveraged positions. And if you're trading futures, regardless of the number of contracts you're trading, you are trading leverage. Okay, it trades as a leveraged instrument. Regardless of the number of contracts that you're trading, right? I will be not messing around because I don't want to dig myself a hole I can't dig out of. The last 2 weeks have been, I would say, challenging. And I think the worst any of my clients have reported to me is I have one client, this is since the second week in the month, is down less than 8 points total ES. Now, that's my 1 day stop, actually below my 1 day stop for me. So if that's the case and you're struggling and you're down 8 ES points, that's fantastic. Hopefully the market's going to get, we're about to break out of this awful range that we've been in and actually get some good trading would be extremely nice. So let's go through the scenarios now that I've locked this out, right? So get rid of the Globex low here. So obviously Globex low is now moved down to this 1826.50 area right here. On a good stretch, right, I'm willing to take somewhere between this 1833 and 1835 is an area of potential. I'll have to judge on the price action. I am definitely willing to take a short first time into the white zone today. And I'll probably take the white zone almost regardless of the size of the stretch, unless we consolidate right here and then push up, in which case I'll have to move to the back of the white zone. But anything other than a consolidation right in front of the white zone, and I will most likely be taking the front of the white zone with a 4-point stop. I'm willing to take the risk on that. So if we open, let's say 1830, which is where it looks like we're going to be opening, this will be gap fill is the back of the white zone, right? So half of that, 1839 to 1830, that's going to put us roughly at 1835 is going to be half gap, right? So how do we measure whether, first of all, whether we're having a trend day? Let's go through those numbers, right? If we open at 1830 and we shoot straight down like this, first 3 bars are down like this, first sign of a potential trend day down. Also, lack of half gap or gap fill. So those are the first 3 things I'm looking for. Tick will clearly be negative. That's not going to even be a question. ES is trading down 10 points almost, and we'll probably open with a -7 or -800 tick reading. The only way I'll reverse that position of looking for a trend day down is if we open with a negative tick in excess of -1,000 on the NYSE tick. Those often are sprung for big reversals from the lows, and I will, at that point, be very, very cautious on taking any shorts and may even take a swing at the long side if I can get a rotation into a zone, right? But those are the days when you see those big 1,000 ticks where you get big gap downs, right? Gaps down, and then it shoots the other direction, okay? So right now, that's not on the menu. I doubt that we see that, but just in case, I needed to mention it. So we open, we shoot straight down, right? Obviously, if we get below Globex low, we fail to have half gap and we fail to have gap fill. First 3 signs. The other signs, rotations will be very small, meaning usually less than 2 points, indicative of trend day down. If that's the case, the first 0 tick reading on the NYSE tick is probably going to be my best entry to get in to a trade that will be aligned with the short side. That trade is difficult because it usually A, comes outside of a zone, and B, will generally come near the lows or on trend day up near the highs of the day. However, it's a very high odds trade for me. I'll call it out if I see the setup and I can do it fast enough. I will call it out, but I will certainly, if I detect trend day down, will be looking for an entry at that 0 tick. If we have trend day down, we have 3 options, right? So I'm going to go through the scenarios of how you can trade this. On good rotation size, you can still take the first trade into the zone, looking for a counter rotation. Time is important on trend day down. They tend not to reverse prior to this 9:30 to 10:30 spot, somewhere in here. Aggressively, you can look at the 9:30. More conservatively, that 10 to 10:30 area, I would look for a reduction in the speed to the downside and entries for reversal back to the upside for a counter rotation. Even on a big trend day down, right? Let's say this really gets ugly in the first hour and we can somehow trade down to this 1810 level, right? That would have us extremely stretched even from where we are. We're down, let's call it 10ish at 1830, 1820 would put us at down 20, and then this 1850 would put us down 25 points. It's conceivable that we get here and we still have a nice 5 to 10 point counter rotation all the way up, and we can still come down and have a nasty trend day down. Again, I'm not reading into the news. I'm not determining whether this is Armageddon. I don't like to predict Armageddon. And breaks usually happen, okay? While they're very nice, the easier shorts tend to come after we have a significant break. I don't have time to go through it and show you this morning, but if I actually, let me get through the scenarios and I'll see if I can. But generally speaking, if this is a structure where we're breaking down from, all right, after that breakdown has occurred, when we get that retest back up into somewhere between here and here, that's usually the sweet spot to get positioned for a short, for a nice sweet trade to the downside, if you're a swing trader or not. Let's go for, I think I've covered the downside scenario. Excuse me, there's one more scenario that we could possibly have here to the downside, so let me cover it real quick. The next scenario to the downside is we open at this 1830 level, we come down, test Globex lows, we find responsive buyers, and we push up either into Wednesday's low and reject from there, or we carry all the way up to the white zone and reject from there, and then come back down on this second test of the white zone, right? I'd be very leery of this, well, not white zone, excuse me, this 25 to 27 area-ish, right? I'd be very leery of taking a second trade here. I would expect it to break. If it breaks, I will also be cautious on this zone, right? If I take a trade here, it's going to have to work damn fast. I'm more interested if this is the scenario in this location, and this location. I will probably try longs from each of these locations first time into the zone on proper rotation size. Let's go through the upside scenario and see what that would look like. That would call for us to open around this 1830 area, right? We come down, we test Globex lows, and one of two things will happen. We either get responsive buyers from there and push up, right? Or we break Globex lows, come into the zone below, trap, panic, and or late sellers, right? And then if we can push back up above Globex lows, which would be key after this break in any scenario, right? And we can trap these guys down here, the normal, what I would expect is, quote, normal, would be to push back to the other end of the range. And overnight, the other end of the range is up here in this 1840 area, okay? And it would be quite easy to trap over-exuberant traders chasing this trade down, right? The key to that would be, can they get back up in here? So how would I manage that? If we break this zone straight away out of the gate and I get tick divergence in here, or if this occurs after 9:30, this flush through, we don't get to test it till after 9:30, that would make me a possible buyer here, right? For a push back up, again, 25-minute rule in effect, or here, right? And I would look for a push back up, and if we can squeeze back up above initial support, I would look for a squeeze to the other side of the range. That's one way where we get the upside. The other way we get the upside is obviously people step in immediately on NQ, and we simply open up. We never test Globex lows. We drive straight up. I would take a trade into the white zone in that case. I would not take it off the lows. I would take it in the white zone. I would scale half on 2, and I'd bring my stop very quickly to see if I can get lucky and get a rotation down. And above the white zone, right, that 1844, 1845 and above comes back into play. Buyers would be in control and would have a lot of people trapped down here if we can get above the white zone today, guys. So it's something to keep your eyes on. And again, these scenarios are just designed to see what are we looking at and what time frame. Key for me today for reversals, assuming a downside move, right, is going to be this 9:30 to 10:30 area. I'm going to look for a time of day where I can get the market to be my favorite odds-wise of a push back up, right? And then the next key inflection point will usually come at 1 o'clock, and that'll determine whether we push up higher or we go ahead and we're going to get retest into the lows. Even if we get a retest in the lows, don't forget, most days get on these selling days have gotten overcrowded in the last hour, and we've had big 5 to 10 point push-ups in the last 15 to 20 minutes. Keep that in mind if you're pressing your shorts at the end of the day. Let's go take a look at NQ really quickly. I did not have time to finish out the chart. I will do so as quickly as possible after the open. I sent a very rudimentary copy of this to my clients. So Globex low, we are currently trading at 3606. 3610 is critical, okay? We bounced up against this 3610 multiple times. But really, if you look, right, if we look at the structure here, between this 3600 and this 3610 was a big fight. We rejected multiple times out of this 3610, okay? And I had the white zone just above this area. Even if we push up, we could see rejection down. But the key to really having a downside day is going to be this right here. And I have to go through and examine these zones a little bit closer, right? But we're going to have to get below and hold below this 3,600. The Globex low was 3601.75. So this is where Globex low was. Okay, what I'm going to want to see is that we get below, possibly test into here. It makes sense that we have responsive buyers first time in here. And then on this test back up, I'd want to see a fail and then a push lower. I can promise you at some point today on NQ, buyers are going to step back in. All the streams have been alive with buzz over the Twitter numbers that are coming out tonight. Netflix had much better than expected numbers last night. Again, I don't trade individual stocks, but momentum traders are going to see those numbers and they're going to go, I don't give a damn about China, and they're going to try and push back into those NQ, and it could end up giving us a tug of war, right? And we're going to have to see who wins, probably in the first hour, who's going to win that war. And remember the other day, right? We had a very nasty push down in the morning. And if you look where this reversal took place between this 10 and 11 a.m. time slot, right? And we reversed all the way back up. I am highly cognizant of this scenario today where we push down into this 3580 area. We push back up to 3600, just like they trapped all these people down here, right? You see how it consolidated and trapped everyone in this area? Highly possible. And if I see us trade back above 3600 after breaking, I will be very cautious on taking the short side of the trade for the balance of the day. I want to see it reject 3600, not accept it, and get back above. Really, that's my only scenario on NQ. I'll be watching it very closely. I'm looking to be a buyer first time into this zone, and I'll probably give it a shot at each of these levels on NQ, but I'll be watching price action closely. I don't have a better way of describing it. These are trend day down scenarios. So hold on one second here. Are you talking ES? Are you whoever's asking the levels with regards to the ES, whether it's ES4 or ES14? Every firm has a different way of coding the contract, but the lead contract is the H month, and obviously we're in year 14. So yes, those zones should apply perfectly wherever you're trading. That's the current contract on the ES levels. So unless anyone has any questions about that scenario, again, I'll be keen off of NQ. I expect people to try to step in on NQ early and try to push it back up. I want to take a quick look at where we're at in the larger volume profile picture here. We have 3 minutes to the open, so if y'all need to jump off, obviously feel free to do so. On ES, on the daily, we're going to be opening right at, it appears, 1830 area. Okay, this has been the bottom of this little area of balance. Okay, there's another area clearly at 1820. We haven't had only one close below 1820, so if we close today below 1820, it would be a key that things have changed, right? We could possibly have a scenario we're going to come down and test this 1800 level again. Bigger picture, right? I just want to show so everyone keeps this in mind and we don't all fall apart with the sky is falling scenarios, right? Very simply, this area is the top of the prior balance area that we had that ran from roughly 1760.65 all the way up to 1800, right? This is the prior area balance. A very common breakout pattern, guys, is this, right? We'll trade, consolidate in a range, break out, sweet breakout, right? Then we will come back and either test halfway back or test all the way back and then continue up. There's no reason why we can't be in this scenario and simply be coming back for a test of this original breakout right here, right? And everything would totally be fine. The only area to really get concerned on would be a close below and a hold below 1800, right? But overall, buyers are still overall in control. It would make sense. We've had a pretty good advance, right? From Fed day all the way up. It would make sense to have a retrace. A retrace about halfway back from this low puts us into this 1800, 1795 area. It's a totally natural rotation. Markets rotate 50 to 62%. So don't get overly bearish. The sky's not falling. In order for any real technical damage to occur and for us to have, quote, bearish conditions, we're going to have to get below this area down here. So keep that in mind. We're just in a range. It's just range trading. Don't let the news blind you to being overly bearish or overly bullish. These moves are balanced moves. They're designed to shake people out of their position. The market's a smart place, right? They're going to try and shake out the suckers, just like it does with day trading, right? The algos are designing it to make those trade entries look scary as hell. Why? So you won't take them. They overrun them a little bit. They make them fast and scary. And if you don't know the rotation size and you don't understand the larger context of the market, life can be really hard. I'm going to look at NQ really quick, and then I'm going to get over here and get to work. I'm not planning to do anything for the first 15 minutes anyways, so I want to make sure I cover this thoroughly. Over here on NQ, right? Same scenario. Okay, let's go through the sequence of events that's been going on so we're all clear. If you look, we had an area of consolidation, right? Failed breakout, pull back to break out, broke out, right? Run, 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 run. We did a retrace, right? The sky is falling retrace right here, Fed day, right to this prior structure area. We tested, we took off, we've broken out. We went up. This was the breakout area right in here. We came back and we tested. We gave a little bit more than 100% retrace, but just slightly. Responsive buyers were found. We pushed up. We've broken out again. This is going to screw up my drawing, but what the hell? I think you'll get the point. We've broken out again. We have an open gap sitting right here. Okay? Breakout, come back, retest, and then advance higher. I'm not saying this will happen. I'm saying this is a normal pattern. We're seeing consistently higher highs and higher lows on the daily chart. This is the channel right here. Excuse me, my beautiful drawing. We're just at the top of the channel. We'll probably pull down to the bottom of the channel. Find responsive buyers. Markets just don't fall straight out of the sky for no reason at all. Okay, obviously we're getting an open drive down on ES, and that's not unexpected. Like I said, that's what I thought would happen. We have a gap and go at this point, and we'll see how far stretched they get this thing before we get some responsive buying. Right now, I'm totally cool waiting and letting them bring their setup to me and not chasing it, right? The key is not to get excited on a day like today, but instead let things calm down. All we're looking for is 1 or 2 trades at 2 points apiece, right? I'm not trying to hit the home run. I could care less about the home run. It's no big deal. So that being said, what this does do with this open is it traps a ton of people up here, okay? And depending on how far down we push, obviously as we approach this area right here, I'm going to expect responsive buyers back up first time in. Don't judge it too much just by the open, but right now there is a bit of panic out of the gate. Also, even if we had a nasty day where it went straight down like that, remember, there'll be retraces that'll give us nice trades to the downside all the way through this. All these patterns follow. If you want to see what a market that breaks down looks like, go look at gold back last summer and the breakdown there. Textbook, and there was tons of opportunities, both long and short, through the entire breakdown process. So, like I said, we're breaking below that 25 area, 26. We had no rotation in that zone, and so that zone has saved you a considerable amount of heartache. Here, let's go see what that looks like really quick. Okay, well, actually we're testing just in the back of that red zone on NQ, and on ES we have tested the back of this very critical area, right? Again, very little rotation here. We don't have 6 points quite yet. It would have been 24. It would have been nice to get a little bit over. And again, you're in the first couple minutes, and clearly that is one very nasty red bar. So the other clue that'll be, are we having trend day down? We'll have the inability to penetrate above this first 5-minute bar, and each of the next successive 5-minute bars should provide us with lower lows. Again, I am targeting right now 1815 is the first place where I'm really looking for a less aggressive long, right? We'll be nice and stretched at that point, and I may try 1820 area depending on when we get to it. and meaning time-wise, right? Are we close to this 9:30 to 10:30 area? And also, I want to judge based on price action. I don't want to consolidate right here and then come test this zone. I'd rather let it get nice and stretched out to take these trades. So really, that's it. I will be looking for a zero tick retrace, and I'll call it out. So everyone, have a great day. I hope that helped out. And hold on. Oh, the volume profile. Sure. I'll flash that up there real quick for you, Daniel. But other than that, I am done. That's NQ, and here I'll pull up ES for you. That's ES's. You can see we have a clear gap here, right? That'll be a gap fill if we can possibly get back up there today, right? And there's an open gap sitting right here. I would expect to find responsive buyers on the first time in. Okay, well, Daniel, you can hit me on Skype, and I'll see if I can help you out with that. But I'm going to drop off this now and get focused on the day. Have a great day, everyone.